Well, I think this earnings period is clearly showing us that the economy is slowing. And you're seeing that particularly in some of the hardware and semiconductor stocks, as you guys just talked about. And yet, when the market's going down, tech's not getting particularly hard hit. So I think there's definitely risk in a part of the market that's really represented growth. And God help us if value ever starts outperforming growth again, tech is at risk. But it's encouraging that we're not seeing tech get hit harder than the market. It's still one of the few places to get growth. And having been around in 2000, I think while there's some similarities, we haven't seen the kind of tech spending boom. Other than some of the software names, we don't have the excessive multiples. So I think tech is, generally speaking, a place you're still going to want to be. And even in a downturn, I think there's going to be names that do well.
But isn't there, as I sense part of what you wrote, the idea that if companies do not have fortress balance sheets, they're going to have a hard time navigating through that, through a recession. They may have to look at different kinds of business combinations. There could be a lot of stuff that would go on in that space with companies that in some cases are names we know, but still may not have the financial strength to power through.
Well, you do worry about companies that have taken on a lot of debt recently, either to make acquisitions or to buy back stocks. We are at an all-time high in terms of, I think, IPOs going public that aren't profitable. At some point, that is going to matter. A lot of these unicorns aren't going to turn out to be unicorns potentially at the end of the day. One of the most interesting sectors is semiconductors. Semiconductor reports are generally not great, and they're getting hit by automotive and industrial exposure. And yet the SOX is doing well. In fact, I just before going on here was checking that 75% of semiconductor stocks are above their 200-day moving averages, which is better than any other tech sector. So either investors are sort of looking ahead and discounting the bottom and looking ahead to growth next year, or there's some false hope. And that's a place that I think you could see a hit if we definitely go into a recession.
Right. And the flip side, maybe it's a nice green shoot if we're not. Stephen, where would you tell people to be right now? What do you think is most attractive?
Well, it's hard not to go with some of what's been working. So frankly, the platform companies, the Googles and so forth, obviously are at risk from regulation. But their multiples are pretty reasonable. They're generally selling at about a 20% PE premium to the market. And I don't think regulation necessarily is going to throw them completely off their games. If you actually broke them up, which is difficult, probably would be a shareholder enhancing event. And I was talking to a tech executive recently who's been in this position before with the regulation and antitrust, and he said you either have to win fast or settle. And I think these companies understand that. So I think there's still opportunity there. I think some of the IT hardware names that I've covered in the past are interesting here that have really gotten hit. Dell, small name in storage, Pure, and even Cisco, which has taken it on the chin this week, but is still one of the best performers over 12 months, and in the networking space is a good place to be.
So you like Cisco even after it's kind of, not Armageddon, but it's swoon?
We do. My colleague Andrew Vodheim and I still have a buy on it. We think there's still 20% upside in the stock. Clearly a lot of what's happening there is macro. They're actually saying they're not able to compete for Chinese business anymore. But the fact is networking is probably the hardest part to do of infrastructure. And we know that by the fact that hyperscalers like Amazon still have to buy some networking from folks like Arista and Cisco. Cisco also has a product cycle. You remember, Tyler, back in the days, product cycle was everything tech was about. Product cycles still matter to companies like Cisco, and they've got a big one in their campus switch business. So, yes, we would be coming back to the stock here.